Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending August 15th, 2022. Let's get into stocks. Investors were encouraged by an inflation rate that was better than expected, which is kind of weird but true. So this combined with the Federal Reserve Chair's recent comments regarding less aggressive interest rate hikes going forward drove stock prices higher. Good news, the benchmark S&P rose 3.31. The Russell 1000 increased 4.97 and the NASDAQ added 3.1. Now overseas, the developed markets, which is the EFA, rose 2.17 and the emerging markets index was up 1.66. Within the U.S., the small caps outperformed large caps and value stocks outperformed growth stocks. Now the best performing sectors were energy and financials, and staples and healthcare were the laggards. Talking about fixed income, the value of the U.S. dollar is up 10% year to date versus other major currencies, and that is equivalent to at least a 50 basis point rise in the federal funds rate. The Fed has just started its quantitative tightening program after the quantitative easing was put into place to support the economy, but gave us a lot of runaway inflation over the last 2 years. So combined, these actions have had an effect on increasing interest rates by perhaps a full percentage point since the start of this year. This helps to explain why the Federal Reserve Chair indicated recently that reducing the pace of hikes by the Fed may be enough to bring inflation under better control. The 10-year Treasury yield was 2.84 at the end of the week, up a mere 1 basis point. Now commodities, let's talk about commodities. Oil prices rose last week after OPEC indicated that global oil demand would soften, which implies that OPEC is likely to cut production. Weird, so raise the prices, right? Which is weird. If it softens, well, whatever. So West Texas crude oil closed at $92.09 per barrel, up 3.46%. Let's talk about economic data. The headline consumer inflation rate was flat on a month-over-month basis and 8.5% on a year-over-year basis in July. Slower than the 9.1 rate in the prior month. So that's why you saw the market go up. They're like, wait, it was only up 8.5 instead of 9.1, which is still horrible, but hopefully it means it's coming down. As pressures ease on the back of lower oil prices, and core inflation, which excludes food and energy, decelerated on a month-over-month basis, but held steady at 5.9% on a year-over-year basis, better than the consensus estimate of 6.1. The producer price index fell 0.5% month-over-month, the first negative monthly rate since April 2020, slower than the 1.0 increase in the prior month. The consensus expectation was 0.2% decline. Now, on a month-over-month basis, the wholesale rate was 9.8%, decelerating from the 11.3% in the prior month, and core producer prices rose 5.8% from a year earlier, which is a deceleration from the 6.4% in June. So as you see, of course, by raising interest rates and the price of everything going through the roof, what's happening? People are not driving as much, which puts oil demand down. People are not going to consume as much. They're not going to buy as much. They're not going to go in debt as much. Why? Interest rates are up. So of course it's going to soften. So when everything is spending like crazy, inflation is going through the roof, it's coming back down with everything that's happening. It has to happen. It has to come back down. And a lot of it is because of behaviors as well. So let's talk about consumer sentiment rose to 55.1 in August from a July reading of 51.1. This is better than the consensus estimate of 52.5. And sentiment rose across all income categories, buoyed by the lower gasoline prices, but particularly for people with low to mid-income levels and near-the-term inflation concerns eased. So, and near-term inflation concerns eased a little bit. Again, a lot of it is predicated on the oil paying as opposed to $5.25 for a gallon, paying $3.70. It helps a little bit, right? Let's talk about some company news. Oil stocks were strong as valuations appeared more attractive to investors based on long-term demand for oil and energy. Gradient Holdings, ExxonMobil, BP, Suncor, and ConocoPhillips rose between 6.23% and 10.66% last week. Also, Netflix, which is a contrarian core select and a G33 holding, shares rose 9.93% last week on the back of strong streaming services subscription growth at a key growth of a key competitor. Shockwave Medical, which is a G33 holding, reported quarterly revenue that more than doubled from a year ago, and earnings that also exceeded expectations. Management raised full-year guidance for revenues, and shares of this cardiovascular medical device company rose almost 30%, 29.57 for the week. So that's it for this week. Thank you so much for being part of our ARA family. To contact us, of course, call us at 855-756-5700. Visit our website at aradvisorsinc.com. Visit our Facebook or YouTube pages. Scan the QR code. If you're not already getting our newsletter, share it with somebody else. Make sure they're getting the newsletter. If we can help, God bless you. Thank you so much for being part of our ARA family, and we look forward to seeing you again next week.